Is the stock market crashing? Is it going to continue to crash? Is it going to continue to sell off? If it's not, where is it going to stop? Where's it going to take a pause? That's what we're going to talk about in today's video. Wild start to the trading week. All 11 sectors down in the red. Now, if you're new here to the show, this is the Stock Market Brief Show. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. If you haven't done so already, hit that thumbs up button. It's greatly appreciated. And subscribe to the channel. Almost at that 100,000. We got a lot to talk about. We're going to go over crypto. We're going to go over signal charts. We're going to go over what I see taking place in the market, the indices, and yes, those risk ranges as well. Make sure you watch the conclusion section too, because I'm going to show you some extra charts. Let's get into it. All right, everybody. So will the selling continue? Well, first and foremost, I like to look at a couple of signal charts first. This is the BPNDX, the bullish percent NASDAQ 100 index. NASDAQ 100 bullish percent index. And I like to apply an RSI to it. The RSI gives me a good idea when I get overextended to the downside or upside. I look for positive divergences and negative divergences. It's extremely accurate for the most part. And it's been giving a lot of good indications as to, hey, when we got overextended here, up in this run here, I was saying, I'm not going to chase this. Don't FOMO into it. Don't FOMO into it because it will digest. It will take a break. So now what am I waiting for? Well, I'm waiting for the exact opposite happen. I'm waiting for it to come back down to here, potentially even put in a positive divergence. So can selling continue? Absolutely, the selling can continue. As you can see, we are still pointing down. So even a period of digestion, this can still be pointing down and get into that oversold territory. That's what I'm looking for as a potential signal to maybe start, either exiting out of short positions or start to build out some more longs. But that's not enough to just go off of. We have to look at many things, okay? First and foremost, let's keep on going down the BP charts. This is the NASDAQ Composite Bullish Percent Index. Is this one still pointing down? Yes. Can it go down further? Absolutely, right? Still has a long ways to go to actually get into that overextended to the downside. BPSPX, you can see this hasn't been moving much at all. So could this go down further? Absolutely could. But you can see here the overextended area gave us a heads up that, hey, we might be seeing some digestion taking place here. Now, the market's throwing some warning signs, okay? And we've been talking about these warning signs. For example, semiconductors. Remember this big run up here and everyone's saying, well, I tagged the bottom perfectly. Semiconductors, which makes up a huge portion of the NASDAQ, they're incredibly important, especially if you want to see continued growth stocks perform. They reverse the entire move in a very quick period of time. And if you don't follow me on Twitter, I posted about this actually on this specific day right here, looking at the volume profile. And I dug into that, how the moves down had increasing volume and the moves up were on, pitiful volume. Moves down, increasing volume, moves up, pitiful volume. And then right here again. So it doesn't look good. However, some could look at this and be like, okay, yeah, it's, potential double bottom right here, and then we might get another bounce. I would agree, right? Just like this move up here, it got digested. But look we talked about a strength test. We never got the strength test. It went up, it pulled back, and it just kept on going. We never, got a good entry position or showed any signs of strength. So that is very concerning as of right now. But it's not just semiconductors. Look at high yield corporate bond ETF. So this is important to track because this moves hand in hand, right, with the S&P 500 for the most part. This and JNK. Look at, it was a huge move off the bottom right here. Look at, we're double bottom. It's already retesting the lows, and the S&P 500 is not. This right here was, I posted also this on Twitter. There was just one day in the SPY where it rallied towards the end of the day, and HYG and junk bonds, they were just basically going sideways. And that was that was an indication right out of the gate. I was like, something's up. Something's going to happen here. I wouldn't be surprised to see, that big move get reverted. And that's what's happening, right? So that's also a warning sign. But hey, could we bounce here? Yeah, we could. We definitely could bounce here. You can see HYG over SPX, the relative strength line's upturning right here. And it's coming to this prior area of support that it bounced from previously. So yeah, sure, it could potentially do that. If we look at IYT, transportation also, right? Huge, massive sell-off, huge volume on the way down. Did catch a little bit of a bid today. I'm thinking that this might catch a little bit of a bounce, but we now have 3 days of sideways chop, so this could be just flagging to potentially head down more. I actually have a position in IYT. I was playing it as a channel trade or a range trade, right? There's the upper range, the lower range, and then play it to the center of the range if we do get some sort of relief bounce. It makes for a good risk to reward because if it gets way outside of it, I just stop out, but the upside potential is good. It's all about finding good risk to reward trades in this industry. Okay, let's continue on. So that's concerning. And then another one is home construction, right? Or if you look at the housing index, I'm just looking at ITB right here because it's a tradable ETF. Typically, I show the HGX. But this, look at that. While the stock market bounced, this didn't do nothing. And that's always concerning, right? These also can move hand in hand. This gives us indications that something's up. Something's not going right now. This did catch a little bit of a bid, but not by much, right? It's just kind of trading up. This could go like this, form another flag, and then we could still head lower. So the bulls need to step it up in various different areas because the market, you can definitely see it's being dismantled very strategically as you're watching all of these rotations in various different sectors. Okay, lumber down 7.57%. Yeeh. Okay, this does not look good either, right? If lumber's heading down significantly lower, that's going to affect various different aspects of the economy. And we can see that right now too in housing. Now, also to note, oil, right? Energy was the worst performing sector today, which we talked about energy being actually a really good setup. And it was a really good setup. It still technically is a good setup. However, we said, got to proceed with caution. The reason why it was good and I was kind of, hesitant on it was, first and foremost, the risk mitigation aspect of it made a lot of sense because price tightened up. Now, you don't want to take a trade, it goes in your favor, and then all of a sudden you wait until it just, you just turns into a huge loser because you could have very well bull traps like that, boom, and then it just takes you out. But down 3% on a day is pretty big, and oil was, that's not oil. Where's oil? This is oil. Oil right here. Energy stocks you'll typically see the energy sector do really well when oil is also performing well. Not always the case, but it's obviously a big component. Okay, so now this is starting to sell off here. Is there more downside potential? Absolutely. This was a pretty nasty day, down 4%, so we still see a lot of volatility there. So we need to be careful. We need to manage our risk. The 10-year yield keeps on ripping. This is putting a lot of pressure on bonds, but the 10-year yield, a full measured move of this inverse head and shoulders would bring us to 3%. Or on here it'd be 30, right? So 3%. Whew, that's crazy. And if you take a look at the 30-year, and you take a look at mortgage rates just starting to, rip too as well. I think they're the highest points. It's like 2006 or something like that I read. But these things look like it's still breaking out to the upside as well. These are bonds. Bonds keep getting, I don't know how many times I'm going to redraw a falling wedge, but bonds keep on getting just beat up. One thing that I did notice here is if you measure this pole and then this flag, that's a bear flag, and then you just take this pole and move it down here. That's actually, a full measured move. So if this was another bear flag right here, boom, that's actually about a full measured move right there. So it's very possible that we also either one, start to bounce here or around this area and or start to flag out just very similar to these previous times as the RSI is getting that overextended area. But as it stands right now, it's trying to catch a falling knife. I still have my position on. My position, though, I got to remind everybody and tell everybody, it is minuscule. I was planning on adding when I saw more strength. I didn't get more strength. If I do see more strength here, I potentially may add. But there, there's other sectors that we'll talk about that are performing a little bit better, and that's where I'd rather allocate my funds to. Now, on a good note, we can take a look here at the NASDAQ Composite. I'm trying to look at bullish things here too. The NASDAQ Composite, inverse head and shoulders. It is wedging right here. Positive divergence on the RSI. No positive divergence on the full stochastics. That got broke. But keep in mind, right, it's pulled back just over 50%, right, from trough to peak here. Now we're pulling back to around that 50% marker to 61.8%. Okay, this could be an area right here as an area where we might catch a little bit of a bounce. And I'll explain more in the conclusion why we might see a bounce here in the near future. But be mindful because this is some nasty selling. You have this big gap right here and this gap right here. It was some aggressive selling to the downside, especially following, this monster, which could be very well a bear market rally. Okay. Now, where do we potentially look for safety, right? It's all about right now that I've seen is various commodities and the dollar. That's been about the safest area, and energy's been safe too this year. Silver. So silver broke out today, but it got completely reversed. There's a reason for that. If you look at risk ranges, right, or those expected moves, it hit the upper range. I'll show you later. And then it started selling off. I still think that there's opportunity here. That's a nasty looking candle, but the MACD, the PPO is still curling up. We broke out on high volume, shooting star type candle, but it's still a higher close, higher low. We'll give it time. We'll see how that one plays out. Also gold, right? Gold did a very similar situation. It was taken off right out of the gate, and then, it reversed the entire move for the most part on the entire day. We'll see here if that wants to continue up. I don't think there's anything structurally broken here. It still looks good to me. We just got to give it some time because that's not the greatest looking candle, but it could be very well just a little fake out. And then you have the dollar. The dollar's been holding up, right? The dollar looks like it can, potentially take a little bit of a breather here, but it has not done so. So we'll see, continue to monitor that. Before we hop into the indices, I want to talk about crypto. Before we talk about crypto, individually, Bitcoin and Ethereum, I want to look at the Saylor to Schiff tool. We gave the warning out last video talking about the Saylor to Schiff ratio turning back over. We talked about the rising wedge. We talked about the falling wedge here, how this signal was down here, and now this signal is up here. So we have a bullish structure with a bullish signal, a bearish structure with a bearish signal, and we started selling off. Let's take a look at the daily time frames. All right, so we are over here looking at Bitcoin on the daily time frame. I'm on the ftx.us website. This is what I use to trade. They sponsor me, so they support this channel. It's greatly appreciated. You can trade crypto with up to 85% lower fees than the competitors, and you get access to TradingView right here, and then you could also trade right from the website. I have a link in the description below if you want to use it as well. So what do we got going on? So obviously it was a big move to the downside. And actually, before I go over Bitcoin, I want to just retouch up on Ethereum actually, and then we'll come back there. So Ethereum, we talked about this bear flag structure and where it can potentially break down to about the 50-day moving average. And look at that, just pristine. Kaboom, right to the downside, and guess where it touched, right? The 50-day moving average got just below that 3,000, still floating right around there. And this is back testing, this prior area of resistance, which can become an area of support. So we'll see here if it can hold. Also keep in mind this structure, this trend line down here. So we have a confluence of support in this area to just be mindful of. The MACD, right? Bearish crossover. It's still bearish at this particular point in time, but we're still holding above 0 right now. So a little risky, but it could also be an opportunity because the buy signal, by the way, on the Saylor to Schiff tool, it's in a sell signal right now, but it hasn't closed there for the week. So it gave us an early indication, right? We were talking about potentially scaling profit. So if people did that, awesome. If people also front run the signal, that's awesome. My strategy doesn't. I keep it super simple where I don't need to think. Okay, but this right here, as we haven't actually had an official sell signal yet because I wait for the week to close, this could be potential area to accumulate more because if we do get the sell signal, you're going to be getting out of the position anyway, and that would just be a very minuscule loss. Okay, so that's for Ethereum. Let's take a look at Bitcoin, BTC. Crack that 50-day moving average completely. Now look where we're testing. We're testing right there at this another trend line, okay? So this right here, it is a little sketchy, right? I think we need to reclaim, obviously, the 50-day moving average, and we need to do it fast. This breakdown right here, break through the 50-day right into this area of support, happened on some strong volume, okay? So be very mindful of that. Now let's go ahead back and look at the indices. All right, so right out of the gate, let's take a look at the risk ranges. Look at the S&P 500. The S&P 500, the proxy here is the SPY. The SPY tagged it to the T and pretty much closed there perfectly, right on the lower risk range, right out of the gate, okay? So can there be more selling? Absolutely there can be more selling, right? We talked about it's kind of wedging like this, flagging where we can potentially head lower, but just be mindful, day one, it's a shortened trading week, we have earnings, but we're already at the lower risk range right here, okay? Now crashes do happen on overextended areas, so we'll continue to monitor there and see how this works. This was a big crack below that 200-day moving average. Be careful here, okay? You don't want to be a hero here by any means. You can take trades, I would say, intraday. You can do that whenever, and it makes for good risk to reward, especially if you're trading these ranges. Now, keep in mind, we've been waiting to see if there's strength. This move up, we haven't actually had an official back test yet. It's just been going straight down for the most part, okay? So until we see some sort of strength or something hold up where it can give us indication that we're going to see further upside, well, then, it'll make things a little bit easier to navigate, but it's just not there on the S&P 500. If we take a look at the 15-minute time frame, pretty much throughout the day, it was doing this, sideways, right? We still have this gap above us, and you can see it cracked down right at pretty much towards the end of the day, and then finished right at that lower risk range. Still a positive divergence there in the RSI. So I think it's very possible that we just skirt around this for the remainder of the week, or if we bounce back up and could come right back down, it could be very well one of those type of weeks. Especially with the economic data coming and also earnings. So be mindful of that. If we take a look at the Qs have a little bit more room down to go. Look at this hits to the downside. Boom, gap down. Boom, gap down. Some pretty nasty moves. And what I find interesting here is on the way up, we're closing at the highs. Now on the way down, we're closing darn near at the lows of day. Not too far off from that lower risk range, so we'll be keeping an eye on that specific level. If you look at the 15-minute time frame, very similar to the S&P 500, flagged throughout the day and then started breaking down towards the end of the shift. Okie dokie. If we take a look at the IWM, IWM wasn't affected as much, so that might be one to watch. If the market does turn around, small caps might be the place to keep an eye on coming into tomorrow, because they did hold up. They held up relatively well for the most part. So if the market all of a sudden wants to jam up, and keep in mind, IWM, financials take up a big part, energy stocks take up a big part. So if all of a sudden we start to see that run, this could be an opportunity here. So that is one thing that I will be paying attention to going into tomorrow. If we take a look at the 15-minute time frame, positive divergence over there, right? And we have a falling wedge structure. So we will see if this continues to hold, right? Pull back, boom, 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 and then potentially pop out of this. Or the 5-day moving average is sloping down at this particular point in time. That can act as an area of resistance, as we've seen plenty of times, like here on the Qs and here on the SPY. It tagged it, couldn't get back above it, and then started breaking down. Okay, let's go to the financials. So financials, we have the earnings coming out here soon, right? Not the greatest looking day for the financials, inverted hammer, and you can see here, if we look at the closes and opens, it's kind of like a bear flag right here. So if we get bad news on earnings, I think that this comes right back down to 37 and come down there really quickly. If we get somewhat good news, right, on the financials, this could fire right back up to the upper risk range right there. So that is what we'll be keeping an eye on. Now, this is where it gets a little interesting, right? We talked about, okay, is the stock market crashing? Is it going to continue selling? And if it doesn't continue selling, where can we potentially see where we can see a bounce? Well, that's why I really like looking at these risk ranges, okay? But before we get into the risk ranges of some of these bigger products, take a look here, IWF over IWD. This is growth over value. This helped us navigate the rotation back into value, okay? And it also helped us find the rotation on this big bounce in growth stocks. So now, why I'm pulling this back up is we're coming right back down to this area, right? Somewhat overextended, but on this relative strength line. So this, as if it heads down, it heads down. But if we start to wait for the turn of the rate of change between growth and value to uptick, like it did right here when we watched the downtick, that could give us an indication that we might see growth stocks actually start to kick in again, or potentially catch somewhat of a bounce. So if you are interested in trying to tag a bounce or find a bounce or look for some intraday trades, we might be there for growth stocks, and we might be there pretty soon. So let's take a look here at some of those bigger products. Apple, you can see here, right at about at that lower risk range on day one of this move. So what the week was priced in for the entire week, on day one, we're basically down there. Okay, Amazon, still a little bit more room to go. I'm going to keep going on. Facebook, we just about tagged the lower risk range. Let me see here. Google, we breached the lower risk range on some pretty nasty move to the downside. So a relief bounce as we're coming into this area. This might be one to watch to play intraday for a bounce. Now take a look at, where's the other one? Here we are. Microsoft, there it is. Microsoft also breached a big move. That's a huge move to the downside with Microsoft. So careful as it gets outside of it. We can have some, significant selling take place, but just be mindful that, hey, if you are looking for potential fading type trades, if we gap down tomorrow, Microsoft actually might be a good play to play intraday for a move to the upside. I think that it can definitely come right back to the lower risk range, and that could be a great intraday trade. So keep an eye out for Microsoft and Google. NVDA, okay, we talked about semiconductors getting hit and hit hard. We'll look at it, tag the lower risk range to a T. So if we start to see growth stocks start to get some strength back, right? Take a look here. I mean, if you just play this back up to 230, right, to fill this gap, that can be a very good possible play as it's in this area of support here. So right there, like this is another opportunity with a good risk to reward. I think that's pretty much all the ones that I wanted to show. Here's SLV. Remember, I talked about silver, how it got reverted. Well, look where it came, right at the upper risk range, then started selling off. I think those were the only ones. SPY was down there. Yeah, that's all I got for you. Oh, no, here, Tesla. Yeah, Tesla also right down there towards the lower risk range too. So, all these big dogs, the mega cap stocks, they've already reached their lower risk ranges for the most part. This looks like it can set up for a potential bounce. So be very mindful of that, right? If all of a sudden you're shorting into the hole right now, this is where you'd want to start potentially taking profits. Now, not to say that it can't go down further, but this is typically where you'd say, okay, now I want to cover some of my shorts. Now I want to start either one, trying to play a bounce, or I just want to cover my shorts and wait for another setup. That's all I got for you, everybody, on today's Stock Market Brief. Have a wonderful day.